Bank of Canada just raised interest rates by 1%. Why did they do that? What's happening in the real estate market? And most importantly, what should you do about it? So TRREB just released the June numbers, which is comparing June 2022 to June 2021. Sales were down a little over 41%. New listings were up marginal 1%, but overall active listings were up 42.5%. So there's just a lot more supply. So average price is actually still up a little over 5% from June 2021, but it's down 14% from the February highs. And inventory is up to about 2.5 months, which is significantly up from the February low of below 1 month of inventory. So that's, actually a good news story. And this isn't really a surprising story. Inflation is up, the Bank of Canada is raising interest rates, which we'll talk about in a minute, and this is creating a mood of extreme uncertainty, and buyers are retreating from the market. And it's an interesting time, and you really need to look in the numbers, and actually Central Toronto isn't down as much as the 905. So primarily the price decreases are hitting the 905, which were also up significantly more, back in the day. Like Central Toronto is only down 3.8%. Properly marketed properties are still selling. Less bidding wars. I still see one or two, but typically not bidding wars. And buyers are actually still under old interest rate approvals. Those will start to expire, so maybe that will change. And sellers have to adjust. It takes time to adjust. Your neighbor sold their house for $2 million. Are you going to sell your house for 1.8? Well, truthfully, the real estate market was overheated. Last year we did above 120,000 units when typically Toronto's, call it around 100,000. So we pulled some of the sales from this year ahead, right? So, and this is probably a healthy adjustment, even though it might be a little bit painful for some. The Bank of Canada raised the rates a whopping 1%, unprecedented. Why did they do that? They did that because we're seeing record levels of inflation. The economy, I guess maybe was, but is still, fairly warm. And really, they're trying to scare Canadians to stop spending, basically, because they're afraid of wage increases coming into effect. So far, they haven't really. And, their fear is that's going to create a long-term higher inflation side. We understand that, but we think it's very irresponsible for an organization who was still doing quantitative easing, meaning they were in the market buying billions of dollars in mortgage bonds per week up until April 25th. It's irresponsible of them to stop that and months later jack up interest rates by 3%. Really, the sore point is they said we're going to keep interest rates low until 2023, maybe beyond. And more than 50% of people went with the variable mortgage based on this advice, and now they're paying for it. And now this, inflation has stuck around for a while because, part of it's still due to global events and supply chain issues, and the bank's panicking and hitting the brakes quickly, and, in our opinion, probably too quickly. And asset prices, real estate, stocks, crypto, have all come down, right? So they're sacrificing the asset prices and, we think economic growth to stop this inflation, which is probably slowing down on its own. And I get it, as an organization, it's hard to see what's going to happen in the future. But, listen, if you have 300 economists, 300 PhDs in a room, that stuff, they should have seen that coming, and they could have been way more proactive in slowing things down before we had to jam brakes on. So what's going to happen? Well, in our opinion, again, we're not economists, but we will see inflation come down eventually, probably soon. We will see a recession and probably stagflation, where the economy is shrinking and you're seeing inflation in the short term. The market softening is going to continue in the short term. We don't know how long that's going to be. Nobody does. Nobody has a crystal ball. but it's not going to continue forever. The GTA real estate, listen, it's very strong. The fundamentals are strong. We're going to be short supply. There will be massive pressure on rents, especially in the next month or so, you know, as we see international students returning to the city. If you're thinking about doing a construction project, wait 6 to 9 months because contractors are going to be not busy very soon. So what should you do? You know, interest rates, you know, are still historically fairly low, you know, and we think once people kind of realize that, inflation goes down and confidence comes back, you know, the Toronto real estate market is still supply constrained. So we're gonna get back to FOMO, fear of missing out, you know, not tomorrow, but definitely it's gonna happen again. And it's actually a great time to upsize because the absolute value of a more expensive house has gone down more than what you could sell, say, a condo. So now is a great time to buy. 6 months ago, you know, people were begging for prices to come down and to have a more balanced and equitable market, and it's here. So, you know, now is the time to look. And, you know, interest rates in 3 or 4 years, probably not gonna matter so much, and they'll probably come down as the Bank of Canada lowers them again to stimulate the economy that they'll have to do. So I hope you found that hugely helpful. If you have any questions, if you want to start looking at upsizing or getting into the market, please shoot us an email, info@thinkto.ca. Please like this video and smash that subscribe button so you get updated with new content each and every week. Talk soon.